Hey, this is Jukka from Option Investors, and I'm again on my simulated trading account because, well, as a non-American, I do not have Thinkorswim real account. But anyway, I can do my indicators on this one. So what I'm doing here is the market isn't opened yet, so I'm taking a look at these high values daily indicators. Sorry, daily triggers here, and I see that TT, which is something like Train Technologies PLC com, has a high values trigger from yesterday. Of course, like I was thinking about taking a look at this with the buy next day's dip setting, but I forgot to set that on. So there would have been a trigger yesterday. There have been triggers all the way the past couple weeks anyway, and this has a almost 80% hit probability. So it's an interesting trade. But let's see what the next bar dip setting would give. Next bar dip and go. This gives me, by the way, 15 years of data, so takes a while to simulate that. That would be 75.6% hit rate, which is still quite fine. So one way I could trade this, for example, this idea here is to see if there's a dip this morning. And by the way, I think there may be a dip coming this morning. The indexes are slightly red, so this may be heading lower with the indexes. Well, that's pretty much the bid and ask are pretty much around these previous close price. Doesn't matter too much. So the target would be somewhere here around 187 something. That's where the high values target is set. And one way to approach this would be simply to set a calendar trade, and I would center that at 190. I would buy the leg in the series that is after earnings, sell the same 190 strike in the series that is before the earnings, so that the premium DK eats the value of this away at normal speed, while the increasing implied volatility that the earnings creates will help this call retain its price. So this basically brings the cost basis down a little bit. If I take away, so basically this is 330, 370, something like 350. One other reason for choosing this strike is of course the open interest, so it should be easier to flow in and out of this trade with the liquidity here. So if I take that away, the probability to make a 50% gain on the straight call is 52, and since we dropped the cost basis by selling this dude here, the probability to make 50 goes up. But the Tastyworks does not want to give these statistics for the calendar, so I can't tell you what that is. Combine that with a 75-80% hit rate, and it's a trade that I like a lot. Average duration of this trade is just 11 days, while the longest duration is 59 days, and I believe actually this has 51 days time. Could also move this guy here to September and see how much more that would cost. It worked. Well, that would be $100 more, which is not huge, but then again, I would not be holding this through the earnings reports anyway, so I would actually rather do this calendar. I'm gonna take a look at another trade trigger from yesterday. This TQ is a trend quality trigger, and there's a high trend quality 3 for Dow Jones also. Dow Jones here has a rather good win rates also on the trigger bar close setting for the high values. Well, now there's kind of an overbought situation on the Dow, so I would not maybe buy this just yet. So my favorite is the TT trade for today, but still these results are also very good. And since the target is at 350, if we get a little dip to 340 or whatever, something like that, which we could get, then I could approach this with a similar calendar approach, or let's see what I can find. What could I find? How much time do I need on this? Now the market is opening. 77 candles. If I would like to play this really safe, my target is 350. I would look at something that is longer than 77, maybe that's 79. And okay, I've got a trade open here, so I don't want to play with these numbers. I would maybe, let's see, if there may not be any liquidity here, but what I could do is basically sell that and buy this. So as the target is 350, and it usually takes no more than 77 days to reach that, after 92 days I should very easily have reached the 350 price, and that would make this go to max profit. And now if this would, for example, cost $2, I have no idea what that costs, because now the prices are not coming through. My internet seems to be giving me some trouble, but that would create a 2 to 3 risk versus reward ratio, and that coupled with over 70% hit rate would make me very interested in this trade. We got a dip, a very tiny dip, so technically the next bar dip setting is also valid here. If I put that back to trigger bar close, I believe Dow Jones results are better that way as well, so over 75% hit rate on the high valleys trigger. And keeping in mind that the deep valleys, they have insanely good hit rate. For Dow Jones, the deep valleys trade is still open from here, so technically this here should have also the deep valley triggers win rate, because the deep valley trade is open, it has not won or lost yet, and therefore this is a higher probability high valley trigger. If there's, I hope this makes some sense. And by the way, with 15 years of data, if I can get over 90% hit rate on a trade trigger, I think that's quite a cool trade. So I wonder, I've got these prices already. I'm going to set this just to see if I can get a dip to 2, and I've got some trades open in Dow Jones already, so I'm going to just offer to buy one. I'm gonna set this here and see if I get it. And if I do, then I've got one more high probability, higher reward than risk trade open for Dow Jones. Cool. If you like this kind of trading, if you like this kind of dashboards to help you make decisions about what charts are good and what charts are not good, you may want to check out climbingvalleys.com. You can find more information about my indicators and also how to use them and how you can get access to these sort of tools. My name is Jukka Karinen from Option Investors, and I wish you a very fantastic trading week. Make a lot of profit and climb safe.